What is going on, investors? Hopefully you guys had a great week out there. That is right. It's time to celebrate because the weekend is here. Friday is here, and the FANG Stock Recap Show here on the Investor Channel is here, where every Friday we bring you all the major news for all the major FANG stocks, plus Microsoft and Tesla, and then we go over to the stock charts as well. Take a look at these from a technical perspective, get you set up heading into Monday of next week for the most critical stocks in the stock market. Now, these companies are all coming off the heels of announcing earnings. We'll kick things off like we always do with Facebook. Start of the week at $356 and the week up slightly to $363. Now, the news out of Facebook this week is they're setting their first movie premiere. It's this 9/11 museum documentary. So I guess they've created this museum for the 9/11 tragedy that happened many years ago. And I think that's awesome. But I guess this museum was kind of controversial. Apparently this documentary is somewhat controversial, but it will be presented and debuting on the Facebook platform. And this is a ticketed event where you have to buy a ticket to actually view this, just like a regular movie. Now, Facebook has committed to not taking a cut of the ticket sales until 2023. So basically almost like a freemium model, if you will, with Facebook. What they're doing is they're trying to get documentary movies, other movies out there that might not make it to obviously like the big screen. Well, they test that out on Facebook. They see, well, maybe we can make some money on here. It looks like you're going to be charged $3.99 for this. I love this business model because when you think about Facebook, the bulk of their revenue comes from me viewing an ad and clicking on an ad and having to have that ad have high conversions for that advertiser to want to keep running their ad. There's a lot of things going on with online advertising. This is a completely different type of revenue model. And so I like this, and I hope Facebook puts more efforts and more money into this, and I think they've certainly committed to it. If they can this business, while I don't think it's going to be as big as their traditional ad business that you see on Facebook, Instagram, those types of sites, I think this could be a big business for Facebook, one that's actually tangible, one that actually makes an impact on their earnings. Not necessarily this year, not next year. Obviously, they're not looking to take a piece of this until 2023. But I think this is something that'll move the needle at some point for Facebook. Good, cool to see it in its early stages. Moving on to Apple, started the week at 145, ended at 146. We'll talk about this from a technical level in a second with Apple, is because we've just kind of stalled out here. We're like, autopilot kind of coasting in the air with Apple shares. Talk about what that means. We've seen that before with Apple. Apple suppliers in China are reportedly struggling to find iPhone workers. That's a problem because I think the new iPhone comes out here in a couple months. I guess if you stay on for 90 days, this is Foxconn. If you're in China, you're looking for a job and you stay with Foxconn to build iPhones for 90 days, you get a $1,578 bonus. I think this is in dollars and not the Chinese currency. You get over $1,500 bonus. Sure, be cool to see that here in the United States. You're seeing it to a certain degree with some employers. And certainly the tighter the labor market is, obviously this is I don't want to say this means inflation is permanent, but at least right now where we sit today, this is absolutely a sign of inflation where you have to offer workers benefits and incentives to come to work. We'll see what that does to the price of the iPhone, number one, and Apple profits in the future quarters. Now, this is a really weird story. I don't want to say weird, but one that's difficult to talk about because Apple is reportedly planning to scan US iPhones for child abuse photos. And obviously on the surface of this, everybody I think is in agreement that is viewing this video, that it's of sane mind, agrees that child abuse is absolutely terrible and we got to try to get rid of it. And if there are ways to prevent it, I'm certainly all for it. But boy, this takes you down a slippery slope where if you have your iPhone and you upload photos into iCloud, apparently Apple is going to be able to use technology to scan those photos for abusive acts on children. And again, I'm like, wow, this is one of those topics where I think we could have a massive discussion on this, because I think this topic right here, a lot of people could be in agreement with. But let's remember, a couple years ago, there was this tragedy. I think it was down here in Southern California, not far from where I live. There was a really, really tragic event where there was an iPhone found at the scene that Apple was not willing to unlock. And people lost their lives during that event, and Apple was not willing to unlock the iPhone. Now they're going to scan your iPhone through your iCloud photos and go through it. I don't know, slippery slope, okay? Obviously, we all agree this is a terrible, terrible thing that they are scanning for. I think we're all in agreement of, hey, can we find out ways to prevent this? That would be great. But where does this end? I think that is the broader conversation, and people were having those conversations this week. We'll see where it ends up. Now, AMD launches high-end Radeon GPUs for Apple MacBook Pros. This is actually pretty cool. Now, I think this is still for the Intech Macs. I don't necessarily think this is for Apple's processing Macs. And so you get another option, and these are for the high-end Macs, okay? Obviously, Apple is coming out with their own silicon. We'll actually talk about that here with Google in a second. They're coming out with their own chips, but for the most part, these aren't quote-unquote high-end devices, okay, for the quote professional. Okay, someone like me, I had to buy a really high-end Mac, even to do very simple videos like this, in order to make it not as time-consuming and not use as much computer power. I actually had to get a pretty high-end Mac. I had to spend like close to $3,000 for one to make it to where the computer didn't slow down. So it's still nice that you have these options. Great for AMD. If you looked at AMD stock, that's up at over $110. Holy crap! We were shouting that one out back at $70 and $80. So it's nice to see that one has paid off nicely. Now, moving on to Amazon, start of the week at $3,334, end of the week about $10 higher, not basically sideways with Amazon, and it was kind of a sideways quarter. We talked about that when we did our Amazon video. Now, Amazon tells its office employees to stay at home until early 2022, so next year. We saw a lot of this week, okay, with obviously offices were just starting to invite employees. Some already had brought them back, but the offices were still kind of in that process of getting people to come back. Well, now we kind of pumping the brakes on that. And I don't necessarily think this is going to affect Amazon to a certain degree, but we'll see what happens. This is super interesting. So Amazon and Best Buy, I mean, gosh, you could rewind time 5, 6, 7 years ago. People were like, Amazon's going to put Best Buy out of business. There's no reason for a Best Buy. Well, now they're partnering to launch a new TV under strategic tie-up. So the TVs are these Insignia F50 series Fire TVs. So they have Amazon's Alexa integrated with them, and probably all the Prime Video stuff. But here's another thing that was also interesting is you can buy a TV on Amazon's website now and pick it up at Best Buy within an hour. So I kind of like that. So Amazon, instead of buying, there's been rumors like they might buy Kohl's, or they might buy a bunch of real estate and a bunch of bankrupt like Sears real estate, so they could open up a bunch of stores. I actually think this strategy is really interesting. Take Best Buy, which already has all the stores out there. Take maybe a Target, maybe even a Walmart. I don't know. I'm not saying this is what Amazon's going to do, but I like this tie-up where we take a retailer already with a bunch of boxes open around the country, partner with them, and you buy on Amazon and you pick up at Best Buy. And Best Buy, like you might say, well, what does Best Buy get out of it? I'm sure they're getting a little bit of a cut on the sale. The TVs tend to be really low margin, but Best Buy is hoping you come to Best Buy, pick up that TV, you're going to get an HDMI cable. Maybe you get a Blu-ray player. Maybe you check out the new PlayStation. Maybe you buy a little cord for your iPhone. Whatever it is, maybe there is something else that Best Buy is going to be able to upsell you on. A charger, a surge protector, whatever it might be. Best Buy is going to pick up. Again, not every customer is going to do that, but I'm sure Best Buy understands, well, look, a certain percentage, 1, 2, 10, 15% of the customers that come in through this Amazon, buy on Amazon, pick up at Best Buy, some of them are going to come into the store and buy a DVD, buy a video game, buy something. And that is certainly very nice for Best Buy and great for Amazon too. As an Amazon customer, and I want a TV and I want it today, this gives me the option to do that. So I like that. And I think Amazon would be wise to partner with other retailers, similar like they have with Kohl's. Okay, they've partnered with Kohl's on returns and those types of things. Now, ARKK investors, I'm not sure if I said that right, but said this is kind of like just broad thinking by an analyst group. So they said Facebook should weather inflation very well. Amazon's story more complex. I totally agree with this. Okay, so if we have permanent inflation right now, I think nobody's in disagreement that we're seeing temporary inflation. The argument is this permanent? Is this going to continue? Will the prices just continue to rise and rise and rise? And you have people actually on both sides of that making very, very strong arguments, to be honest with you. Now, I totally agree that someone like Facebook will survive this very well. The bulk of Facebook's business is automated. Buy an ad. Like I buy ads on Facebook. I never have to talk to somebody. They give me access to a rep, but I don't necessarily have to talk to this person to run ads, test ads, those types of things. Same with Google, similar type business. Amazon's completely different. Amazon has over 1 million employees. So if you see wage inflation for every $1 per hour, think about that. You're timesing that by like 1 million people working per day every hour. I mean, it's tons and tons of money. On top of that, Amazon's business is very asset and labor intensive. Those are quotes from this analyst group. And I can't agree more. They have to buy warehouses or lease warehouses. They have to lease equipment. They have to lease all this stuff, shelves, robots, all those types of things. And if the price is just going up and up and up, it's going to impact Amazon's business far more than like a quote pure play digital company like Facebook's got lots of employees, but boy, they could cut fat if they wanted to. I know that for a fact. Now, moving over to Netflix, started the week at 515 flat. 520. Most of these stocks somewhat flat this week. Now, streaming sites take losses as Discovery, and you could throw Roku. I didn't pull the Roku headlines on here, but Roku also reported earnings this week as well. So Discovery reported earnings, and the reaction is focusing on subscribers. So Netflix reported, I think it was like 2 or 3 weeks ago, negative growth here in the United States. Roku just reported negative growth quarter over quarter. They're still growing on a year over year basis. And Netflix probably was too, but quarter over quarter, everybody that has a Roku account already has one here in the United States. I think we're comfortable with this, right? Discovery seeing the same thing. Netflix seeing the same thing. This entire industry, the streaming industry, think about like how long it took the cable business to grow. I mean, the cable business probably grew over decades, whereas the streaming business, as you'd expect, grew exponentially faster than that. Look at something like Disney Plus, which has only been around for a few years, has tons and tons of subscribers. Well, you're going to see as technology advances and it becomes easier and us as consumers become more comfortable with it, well, you see the adoption rate and the acceleration happen faster, okay? Whereas cable TV and stuff like that, it took longer. High-speed internet took longer. Those things take longer. But as time goes on, technology becomes more accessible. The adoption rate gets faster. And so we've seen that with streaming sites. In my opinion, here in North America, I'm speaking particularly here in North America, probably parts of Europe as well, really developed countries, quote unquote, developed countries, you've probably seen a cap on the number of users. Now, developing markets, those types of things, Latin America, those places, they're probably still on their way up. They're still ascending into adopting this technology. But look, Netflix, Discovery, Disney, all these companies, yes, they had that fast acceleration, and now we're going to see it plateau. And what is next for investors? That's part of the reasons why you see Netflix stock basically flat over the last 5 days. And when we look at it from a technical perspective, it's been in a very, very tight range because I think investors are wondering, well, what's next with them? So we'll see how they answer that question to investors here very soon. Now, the broken record is still playing here in the Investor Channel offices. because Google continues to go up. Started the week at 2,697. This is the GOOGL shares. I just quote these just out of habit. These are the ones I own. There's the GOOG ones too. If you want to buy those, it doesn't really matter in my opinion. Well, Google went up to $2,714 per share. So you can imagine from a technical perspective what this one's looking like. Now, Qualcomm dips as Google is to use their own chips in the Pixel phone. So Google, just like Apple, just like Samsung, is developing their own chips. They get a fab to make them, and they start putting them in their phones. Gives them greater control over the performance of those phones. Also gives them a way to kind of differentiate the products. If you're just throwing a Qualcomm chip in your phone, well, guess what? Any other manufacturer can probably get a similar type chip, whereas Google can make its own proprietary chip. Apple can do the same, and they can start competing a little bit better on those types of things. Obviously, I think this is bullish for companies like Google and certainly Apple as well. Now, Google Cloud sales accelerate as pandemic-driven demand continues. So what we've done earnings on all these companies, okay? The big cloud players here, at least in the United States, are Amazon's number 1, Microsoft is number 2, Google is number 3. At least in terms of growth perspective. Obviously, you've got IBM, you've got Oracle, you've got some many other players out there. I'm probably forgetting several. But in terms of the FANG stocks, Amazon, Microsoft, Google are the big ones. We saw in the quarter spending on cloud services increased 36% to $47 billion just in the quarter. Amazon took home 31% of that. So Amazon is still, in my opinion, still the dominant player in this. And it'll be interesting as a side note, AWS is just getting bigger and bigger and bigger. And from regulatory pressures and those types of things, and maybe even a competitive standpoint, I think at some point, Amazon.com, the stock, is going to want to separate that at some point. So I think you will have your own AWS ticker at some point. And I think that will be a massive day for anybody that holds Amazon stock. And that's not a big reason why I hold Amazon stock, and one of my largest my largest holding actually outside of my house and other assets that I have. I think that is a big upside potential. Now, Microsoft Azure got 22% of the spend. That is 51% growth. And finally, Google Cloud is in third, up 66%, got about 8% of the spend. What we did see on Google's financials was the cloud business is still not profitable, okay, from an operating profit perspective. So we'll see what happens there. They're still going to have to grow this business quite a bit to really, yes, from a revenue perspective, it is significant to Google, but from an earnings perspective, they're still actually going to have to grow their cloud business by quite a bit in order for that to make an impact on Google earnings. Moving on to Microsoft, started the week at 285, almost said 385. Maybe we'll get there here pretty soon with Microsoft. Started at 285, ended at 289. As you can imagine from a technical perspective, this one's looking beautiful. Not a lot of news actually out of Microsoft. Might not be a bad thing, especially from a regulatory perspective. Moving on to Tesla, started the week at 711. That sounds good right now, like a Slurpee or something. Ended the week at $700 per share. We'll talk about what this also means from a technical perspective with Tesla. As you recall last week, Tesla was wedging out. If we got above a certain range, it brought in higher price targets. If we got below it, it brought in lowers. Tesla was like on a seesaw, and it was going to go one way or another. We'll talk about which way it decided to go. Now, Cathie Wood's ARKK, its flagship ETF, reportedly sees record short interest as investors turn against the fund. What I noticed is this week, the fund actually sold Tesla shares. And I know I've posted a couple videos where Cathie Wood sells Tesla stock. It's like kind of clickbaity stuff. It's got a thumbnail and whatever. And I do it because it's kind of fun. But there is some seriousness around that. In those videos, what I try to get investors to think about is, I always get the same comments on those videos. Oh, well, she had to sell it, or she had to do this, or she sold it to buy Coinbase, or everybody comes in there and makes excuses for Cathie Wood, like she's not, extraordinarily well paid to take your money and invest it the way she decides, not you. What I want people to think about is, okay, so ARK funds have seen outflows. So think about an ETF. the way it survives is it needs money, okay? It's basically like a company. You need to feed it. You, the investor, needs to feed the ETF money so they can take that money and then go out and buy shares of Tesla or Teladoc or whatever company they want to do. And then they take a fee, kind of a spread in between that, and take a fee off of how much money they intake. Well, ARK is actually seeing outflows. So money is actually flowing out of the fund to the tune of $1 billion. Yeah, $1 billion just over the last 4 months. So investors are actually losing confidence in the ARK fund. And I think that is the primary reason why she has to sell Tesla. She has such a large investment in Tesla in this fund, the ARKK. Tesla is the number one holding. So when you start having outflows of the fund, guess what you have to do? You have to sell Tesla. And that is like, if I came into financial trouble, let's just say I have some financial trouble, and probably my most important asset, being a father, having a family, probably my most important asset is the house I'm in right now. And that would be like over the last 4 months, I just have some small financial problems. Okay. I have some outflows, whatever. I have some expenditures. And the first thing I do is I have to go and leverage my house, refinance, cash out refinance, or even worse yet, I have to sell my house or rent out a certain room of my house, right? Okay, that to me would be like the last resort. That'd be the last thing I'd want to do. But unfortunately, you're at the mercy of the market when you invest in a company, or in this case, an ETF like ARKK. Look, she has to keep funds flowing through the fund, okay? And so if funds start outflowing, she's got to ditch her number one her house, Tesla. She's literally got to get rid of it. And this is why I think, yes, if you want to put a little bit of money into an ETF like ARK, if you don't know anything about Tesla, you don't know anything about technology, yeah, maybe you pay somebody a 0.75 management fee on this. But if you're watching a video like this, there is no way you need Cathie Wood making these decisions for you. Why in the heck would you let her financial problems dictate your investments? Her financial problem is people have lost confidence with a lot of the decisions she's made, buying Coinbase at the top, buying Robinhood at what people think is the top, buying Teladoc at a much higher valuation. So she's created these financial problems for herself, and she's had to sell stocks like Tesla, okay, to make up for the mistakes she's made. If you're a good investor, you don't have to do that, okay? And that's what that's what the investor channel is all about. It's try to make you a great investor. You don't need these people making decisions for you because they're not doing it in your best interest. The best interest for the ARK fund is to never sell Tesla or not sell Tesla for a long time. But when you have 4 months of outflows, well, guess what she's got to do? She's got to raise cash. And the way she does that is selling her number one asset. It doesn't make any sense from any perspective, but particularly an investment perspective. I'm not telling you to avoid ARK ETFs. I'm just telling you they absolutely should not be the cornerstone of your portfolio, because the minute Cathie Wood starts having some problems, guess what? Look at this. This is an example. She's got record short interest. They come out with a press release. It's a top article. It's got 95 comments here on an investor site. Okay. So these things can spiral out of control. The fast as they go up, the fast they can come down. And all of a sudden she's got to liquidate Tesla and all these great, I think really good investments. She's got to liquidate them. And then where does that leave you, the quote unquote investor? You're at the mercy of Cathie Wood, and that is absolutely not what I would want. Now, the Detroit major automakers, which is Ford and GM, they, along with President Biden, support the green put. Look, here we go. So this was interesting this week. So President Biden it was interesting. So he had this EV summit. I don't know what he was calling it, but he invited EV car makers to the White House to talk about EVs. Well, guess who didn't go? Tesla. Elon Musk, or a representative from Tesla, wasn't even there. There's no car maker in the world right now selling and making more electric vehicles, not only around the world, but particularly here in the United States. So I don't know why. I mean, I think I know why. There's political motivations why Elon Musk was not invited, but I just thought it was kind of interesting. Ford and GM, who have been talking about EVs for a decade and can't seem to make one that anybody wants to buy, at least at the current time. Well, they're saying, yeah, 40 to 50% of our annual U.S. volumes will be electric vehicles by 2030 to meet this Paris climate goals. Okay. And this goes along with everything in Washington. Okay. Probably everything that's wrong in Washington. It's not what anybody says. It's not what President Biden says. It's not what the Speaker of the House says. Not what the Senate majority says. It's what they do. And in this case, Ford and GM, it's what they do. Yes, it's cool to go to the White House and say 40 to 50% of our U.S. volume will be electric vehicles by 2030. The reality is these companies have failed for a decade to make a EV that anybody in mass wants. Okay. Whereas Tesla has actually succeeded on that. So we'll see what happens there. And again, GM, Ford, I own some shares of GM. I'm looking at Ford pretty closely as well. So I'm not saying that these are bad stocks. I'm just saying when you see this stuff come out of Washington and the fact that you had a meeting of EV car makers here in the United States and Tesla is not invited? Come on, President Biden, put your political anger aside and actually have something that has a meaningful discussion. So that's what I have to say for our president out there. I know he's watching. I'm sure he is. Piedmont delays lithium delivery timeline to Tesla. I thought this was interesting. So Piedmont, which is seeking to develop a North Carolina lithium mine and processing facilities, had expected to begin supplying Tesla with lithium to make batteries and those types of things between July 2022, so about a year from now, and July 2023. Well, now they've delayed that. So boy, that puts us into what? 2024. And this just goes to show you, yeah, the Ford and GM can say, yeah, we want to make 40 to 50% of our cars, electric vehicles so we can meet that Paris climate goal that you have set for us, Mr. President. Well, look, it's all based on raw materials. And if you can't get lithium and these mining operations get delayed, well, guess what's going to get delayed? The timeline to develop more and sell more and more of these EVs. We'll see if this impacts Tesla. I don't necessarily think this will impact the current models of Tesla. It's really like I'm on the waiting list for the Cybertruck. I haven't heard anything. Maybe I'll get one in a year, 2 years, 3 years, 4 years, 5 years. I don't really know. So we'll see what happens. I just thought that was interesting. Now, from a technical perspective, we are going to have to log back in here. We are going to kick things off like we always do with Facebook from a technical perspective. Not a lot to see here. This stock has been on rally mode once we broke above $300, which was the highs it made back in August of last year, nearly a year ago. Made highs of 300, came down, retested the 260 level, even came down to about 250 on this one. Some great buying opportunities all along here. Once you broke above 300, you back tested it twice. Notice this is on the breakout. So when we talk about stocks breaking out, because there's a lot of stocks, honestly, towards all-time highs right now. And so when they break out and they come back here and back test, that is actually a secondary buying opportunity. In fact, some technical guys that I know, this is the confirmation of the buy. It's not this initial rip off of the highs, okay? It's not this initial rip. It's actually the rebound or the pullback to support. You buy it here, put a tight stop loss underneath this, okay, wherever you want to be from a risk perspective. But you buy it here, you put a small stop loss because the odds are, man, it's either going to bounce or it's going to break from here. So you're going to decide really quick whether or not you're going to make money. And it did. It bounced from 300 up to 330 and then retested again. So never be fearful of the retest because notice what's happened. We ripped, back test, and then we went from 300 up to about 360 on this one. Uptrend's still intact until you break below previous lows, which right now are at 348. That's 20 some odd dollars where the stock is right now, or even these lows, 337. Uptrend still intact with Facebook. Apple, little slightly different story. Okay, we have broken above the highs. The highs we made back up here in January, right at about 144, 145 on Apple. Well, we broke above them, but we've been hesitating. I put this little line in here. We're making somewhat lower highs on this one, okay? We topped out at 150, came down to 150-ish. Now we're at 146. I think next week's an interesting week for Apple. Okay, do we break? Really, you're looking for a break below 145. This is on the bearish side, or kind of the buy the pullback type things. You get a pullback from 145. I think there's a solid odds you come back here to 137 and you start thinking, can this 137 level hold? Now, we were in sideways consolidation. This is the story for a lot of these stocks. We were in sideways consolidation. We broke to new highs. Now, I think what's possible is we're now consolidating at a higher range. So before this breakout above the all-time highs, we were consolidating from Apple from 115 up to about 136, 137 on this one. I think what's possible is that we start consolidating between that 137, which was the high end of the consolidation. Now that's the low end, the bottom of our range, and the high end could be 150 on this one. So that's potentially what could happen with Apple. Keep a close eye on it next week, okay? Because it could do what Facebook did, right? Kind of broke out, hesitated for a second, had to think about it, think about what it wanted to do, popped up, came back down. Same type of thing with Apple. We could have the same type of thing action, okay? Come up here to 150, come here to 146. If you've got some balls, this is a buying opportunity. Okay, from a trading perspective, in my opinion, you come in here, you buy at 145, put a small stop loss underneath it if you don't want to lose your capital, and then boom, you play the pop up above 150 on this one because you've seen the power of it with a Facebook, and we'll look at Google here in a second as well. Now, Amazon, slightly different story. Okay, this one broke down, so this is the cautionary tale, although we know that this gap was impacted by earnings. Okay, earnings came out and the stock gap down. So we were in a tight range with Amazon. We were between 2,900 and 3,500 on this one for basically a year. Finally broke out pre-earnings. Actually ticked all the way up to about $3,755 per share, but broke down after earnings, okay? It's very similar look up here to Apple, okay? But earnings shot this one down. Now we're in this range. Again, what I think is potentially could happen is now we could consolidate in a new range, okay? Amazon consolidated for a while. Remember, these stocks are extraordinarily well covered, okay? From every corner, every aspect of these companies are extremely well covered. And so it's not uncommon for these stocks to consolidate. And so I think what could happen with Amazon is the bottom end of our consolidation range is now 3,300 and we could tick back up to 3,800 and we could kind of bounce around for a while. Not necessarily the worst thing if you're trying to accumulate shares of Amazon, and considering they're $3,000 something, if you have fractional shares, being able to accumulate them over time, probably a good deal. Now, Netflix, somewhat different story. We have not gotten out of this range. This stock for a year has been stuck between 480 and 560. Has it gone up a little bit above 560? Yeah, it has. Has it gone a little bit lower than 480? Yeah, a little bit, but not many days. This is a daily chart. Every one of these candles represents a day. I mean, you can count almost probably on two hands how much over the last year, we're talking about a year, it's traded below 480 and 560. So the bulk of the days we're in this, and we're basically in the middle of the range. You're looking for, again, a break above 560 on this one, a pull back down here to 480. Probably a buying opportunity. At some point, I think Netflix breaks out. When it does, I think it's going to have to be fundamental driven. Okay, we're going to need a fundamental story. Now, the Google analysis is not going to take long. Stock's in an uptrend. It's hard. I mean, a stock is in an uptrend when you can't even get the darn thing on your screen. I mean, look how we've got to resize this and pull it. This is the steepest uptrend as I've seen in a stock in a mega cap stock. I mean, yeah, you got penny stocks and stuff like this that do this all the time, but this is just unbelievable for a mega cap stock to do this. When it's going to pull back, when it's going to stall out and sideways consolidate, I'll let you guess that, because I would have predicted probably a long time ago, but that doesn't seem like it's going to happen. So the broken record remains here on the channel that Google is in an uptrend. Spoiler alert. Now, Microsoft's doing the same thing. Broke above the highs. Again, Microsoft, like a lot of stocks, sideways consolidated for not quite a year, but very, very, very close to a year. Actually, closer to 6 months. I'm sorry. Then we broke up above the highs. The previous highs were 230 on this one. We broke. Take a look, just like Apple. This is why I'm really closely watching Apple next week. Okay, broke above it, came all the way back down, retested those highs again. So that's why I'm not really. There's some people worried from a technical perspective about Apple. Okay, it came up here, and yes, it can break down below this and come lower. Okay, that's absolutely something that can happen, and you protect yourself from a trading perspective with a stop loss on something like that. But we just showed you Facebook example of breaking above, coming back and retesting and consolidating at those highs for a while. Okay, it takes buyers a minute to want to buy in at higher prices. Okay, and it takes sellers wanting to test those buyers and wondering if they're out there or they're not. And maybe going short this stock is risky as buying it. And so people decide, sellers and buyers kind of figure this out. And then when they do, what often happens, quite frankly, is we go higher. And that's exactly what we saw with Facebook. That's exactly what we've seen with Microsoft as well. Once we broke above those highs, this thing has ripped higher. And I tell you what, this thing could look like Google here in 2 or 3 months, where it's like, yeah, 290 looks like a really high price, but this thing could continue to rip. I think you buy this one on any kind of pullback. Okay. Any kind of pullback in Microsoft, I think you can safely buy it as long as that uptrend is intact, because you can look at a chart like Google and a similar type of thing happening there. Now, finally, a Tesla. We talked about how we wedged out right here and we got it. We had to get above 700 and we did. And the stock hesitated right here at 7. Look, there's like almost no decision in the stock. So we talked about we had to get above these previous highs. We did. From a technical perspective. That is good. I wouldn't say that eliminates any risk of a breakdown, because we've talked about you break down below these lows, which are 650, 630, 650 on Tesla. Well, all of a sudden that brings 550 back in play, maybe even potentially 500, and even lower than that, maybe even $400 on this stock. But from a technical perspective, this one did exactly what we wanted it to do from a bull case scenario. It broke above 700. It's hesitating now. I mean, it's snapped at right on $699 per share. We're looking for this to eventually retest the 750 level. If it doesn't retest this 750 level, it makes me worried that it doesn't make me worried, but we might not be able to retest these highs anytime soon. It might be kind of a slower. Think about this trend line that I've put in here. So it could be that we just slowly work our way up to retest these 750s, 800, 850, 900 on Tesla. Whereas it's not like a rapid move like you saw with like a Facebook, a Microsoft. Those types of stocks have rapidly moved. And so Tesla might not rapidly move, but we could get that reaction next week, okay? We're still looking for it to hold this $700 level. Even if it breaks a little bit below to the 680s, 690s, I wouldn't be super concerned about that. It's really the 650 level. If you see Tesla break down next week into the 650 and below, it could be that this was just temporary fake out. It could be we start a sideways consolidating pattern. Tesla's telling us a couple different things. And if you've got some balls, I think there's a trade here. I just think you've got cleaner setups and more interesting setups probably in Apple and some of these other ones, and even Microsoft on some kind of pullback. Netflix is about as clear as day as well. Amazon could become clear next week as well. You hold this level. You've got this big gap here. You could fill that. Those types of things from a trading perspective. Hopefully you guys have a great weekend out there. It was a fun week here on the channel. We'll be back again with more next week. Got a lot of earnings videos, those types of things. When earnings dies down, we'll experiment maybe with some other videos, try to have some fun with the stock market. Hopefully you guys have a great week out there. Hopefully our videos are helping you become a great investor, because that's our goal here on the Investor Channel. Until then, have a great weekend. Enjoy yourself. Be safe. And thank you for tuning in. Good luck with your investments.